Hey, it's Market Theory here. Welcome to another video. Today I'm recording this at 2 a.m. Wherever the news comes out, I'm here for it. I'm the first to post it, I promise. Unfortunately, though, it's at 2 a.m. this time, or at least that's when I'm recording this. So if you guys caught the video yesterday, the Airbnb IPO, I was just giving a little price targets for it, what my play is, and that's completely changing now. They are raising their price targets. So instead of the original evaluation here, as long as we look right here, they're looking to raise $42 billion, right? So $42 billion now. So that's up from what they previously had it as. So previously in the stock price format, right, we were looking at somewhere between $44 and $50, and that for me was a insta buy. That's a heavy buy. As I stated then, I was in the yesterday's video, I was going to be buying during that time until it hit around the mid 50s range up to 60, and now we're at the point where this has changed and their IPO price is going to be in the $40 billion range, right? 42 billion at the top of the range here. So $42 billion. And that results in a share price of around 56 to 60. Now, what does this do for our stock price prediction? Is it change it entirely? And of course, Doordash, they raised theirs as well a few days ago. So they're looking for $35 billion. This one's a little bit more interesting here. And there's a lot of reasons why I'm into Airbnb way more than I am into Doordash. But for the most part, it's like, look at the competitors of Doordash and then look at the competitors of Airbnb. Airbnb doesn't really have direct competitors, I would say, that are notable. We have hotel industry, obviously, but that's nothing like Airbnb. There's people that go to and rent out Airbnbs, and then there's people that go to hotels. They're two different people, and that's just the reality of it. But Doordash, we're talking, Uber Eats, Postmates, whatever, all of those guys. So I just don't really like their moat per se. Then of course we have just a bunch of other IPOs coming out here this year. And for me, the real one that still points out is Airbnb. But the problem with the price here at $42 billion, my whole price prediction there, I said I could see it doubling in a year. Now that was at the around $44 to $50 range, so I was seeing around the $80 price target. That's around what my valuation came back at, around $80 to $90 price range here, and that could be within the next year. So I still see this as a buy, but I'm going to be a little lighter on my position than I previously stated. I said previously that I was going to put 50% of my position in there, right? So my whole position weight, I'm trying to aim for around like 5 to 6%. I'm going to be double positioning in this Airbnb position as long as the profit or as long as the valuation stays somewhat sane, right? So I still say if I could get this under $60, I'm going to be very lightly buying it. I'm going to probably put in about 10 to 25% of my position that I'm willing to go up to, and then wait for the IPO drop. As we stated before, as in the video yesterday, we could look at previous IPOs. It usually goes in the same cycle here. And it's really best to take IPOs and just dollar cost average into them. Slowly build your position into it. Don't just boom all the way up in there. Well, we can see that with Uber, right? We see a 35% drop since IPO day. That's what really happened with Uber. We could look at Snowflake. So Snowflake had a similar little dip. Theirs dip was a little bit less. So you can never tell how big the dip is going to be or how big the hike is going to be. We could go to Rocket Mortgage. These were all IPOs in the last year or so. I mean, Uber, I don't know when that one was, but the other two are all within this year. So Rocket Mortgage, we could see dip a little hike up and then a dip down. So it's always best to just buy on the first day, buy on the first few days, get your initial position built up, and then wait for an attractive price for yourself. You got to figure out what that attractive price is for you. Anything under 60 is still attractive for me on Airbnb. The problem with that is they're going to be IPOing around that price. So I have to get in early or wait for those dips to happen. But anything under 60, I'm buying just as I would. But anything above, it's a very light buy for me. I still think I have a lot of growth potential there. I still feel like that 20 to 30% range is still going to be nice within the next year. That stock should go up 30, 40, 50%. And if we do see a dip, right? If we see a dip all the way into the numbers that I was hoping for originally in the 50 range, I'm going to be heavy buying into the rest of my position. I'm a long-term shareholder in Airbnb. I'm going to be a long-term shareholder. If you guys want to learn more about my whole positioning in Airbnb and why I like Airbnb so much, go check out the video from yesterday. That video more so explains the business model, why you should actually be interested in the business model at all compared to like DoorDash with all those competitors. more specifically Uber. I mean, we just Googled Uber there. So let's go back here. Let's look at Uber just for a quick second. Look at its subsidiaries, Uber Eats and Postmates. These are big players in the food delivery realm. Now, I'm not saying I personally just do not like the company. I'm not saying that. I'm just saying it's not attractive at the price levels that they're going at. They are still a very young, growing company. We got to look at their moat. We got to look at what advantage they have versus the other guys. And it's really all just contracts at this point. They need more contracts than the other guys. If you guys know, a lot of these companies run their delivery through like DoorDash or one of these guys. So those contracts are really important. For example, you have like Little Caesars delivering now. That's what they're promoting everywhere. But Little Caesars is actually not promoting it. It all seems like you're going through the website, right? If you're ordering a pizza, but whenever the car shows up, it's not like a Domino's driver with the little Domino's thing on the top of their car. It's actually a DoorDash driver that shows up, gives you your food. So it's all contracted out. And these contracts are really the most important thing for DoorDash here. Those contracts will bring in profit no matter what. They have the ecosystem really to provide for these companies, such as like Little Caesars, how I said there, but I still see a lot of risk in this business, especially at a $35 billion market cap. So the only one I'm going to be investing is, as I'm always very transparent on what I'm investing in, it's going to be Airbnb. And as for the other companies that you guys need to look out for, obviously still look out for DoorDash. Just see if you like it. If you think there's value there, then of course buy it. And we got to look out for these specific IPOs. I like the Roblox one. I'm interested in seeing more about that one. And then Wish. Those are two IPOs that I will be looking out for. I'll make some future videos on those guys, but for now, hopefully you guys appreciate the work I'm putting in at 2 a.m. Sorry if I sound a little droggy or such. And hopefully I earned your subscription here today. And if you guys want to get some free money or free stocks, M1 Finance and Webull are down below. 4 free stocks with Webull and then $10 free with M1 Finance. We're a new channel here on YouTube, and I hope to see you return back here. Have a fantastic Monday in the market, everybody.